right. We will make this quick. But welcome to the Tuesday live stream for this week. I do have a raging headache, which is why I mentioned that I will be doing this a bit quickly tonight. But at the same time, we don't have too much to talk about since we do have a bunch of economic data coming out tomorrow, right before the FOMC meeting as well. And also, it's a new start of the month. So, it's gonna get pretty hectic. And I would expect to see that, there won't be too much of, one-sided action. I am completely expecting to see two-sided action, as in expansion of volatility as we get really large moves to the upside and large moves to the downside. But it's a lot more prudent to head into the FOMC meeting to on a more neutral bias, because tomorrow can be a very good day to day trade. And I told all my members that's in the private Discord already, so make sure you guys remember that as well. Hey, what's up? Hello. Nice to see you here. All right, so let's first begin with the markets. And I'm only going to talk about the markets today because, tonight, since there really isn't much to look at. But I want to start off with the fact that it's pretty interesting to see that today we actually saw commodities going down. We saw, crude oil related names, right? Like oil refineries. And I mentioned EOG and BLO in the past, oil refineries starting to move back down. And so there are a lot of broad commodities that are starting to show a lot of big reversals, or at the very least some very they're basically losing strength, right? Relative strength. And it's something that's going to be a bit significant in the near-term future, because when we have commodities also moving down in tandem with equities, because mind you, we've been able to see the market holding up pretty well thanks to the fact that we've been seeing surging prices across commodities. So hey, thank you guys for 3 likes. Awesome. So to me, that tells me that we're seeing broader weakness now. We're not just seeing certain sectors having relative strength. We're not seeing certain smaller sectors maybe, or the lagging sectors being very weak. We're seeing overall weakness hitting every single sector, including the leading sectors or leading groups like cybersecurity and semiconductors, which were very weak. Those 2 groups are very, very weak today, if you guys have not noticed. And in fact, I believe after hours, semiconductor stocks had some earnings reports, specifically SMCI, AMD, and SWKS, and they've all reacted to the downside. And so when you have such reactions from the leading groups, just in the leading groups, you can tell that just based off of those specific individual earnings reactions, that the market is very weak. All right, so we're entering a stage where people are being very precarious, right? And we've also seen it amongst consumers. Starbucks today absolutely plummeted. I believe they closed at like negative 11% because they haven't seen any growth, right? And their outlook is very, very bleak, as consumers are really being very cautious on their spending. We've just seen some really bad data just coming out from an economic macro perspective. So consumers are pulling back, which means investors are also going to be pulling back. Hence, just an amazing move down today at the end of the month, as most likely we're seeing a lot of these big money hedge fund managers just offloading before we start a new month, the middle of Q2. So I think it's going to be a pretty interesting day tomorrow. I am leaning by a little bit bearish to the downside, tomorrow. But again, we need to stay neutral because we're going to see an expansion of volatility. And even today, we saw the VIX staying over 15 and having a nice drive up higher near the end of the day as the S&P 500 plummeted. Okay, so, and again, my apologies guys for if I'm stuttering, if I'm, unable to say some words. I am having a pretty bad headache tonight, so I will be taking some Tylenol soon, but apologies about that. So with that in mind, let's go over the S&P 500. So today we actually hit all my downside targets, 505 and 503, and we actually closed below 503 as we closed at 501.98, or basically if you round it up, 502. So I love the fact that we retested the daily 21 SMA, and I even mentioned this, guys, in the past few trading days, in the past few weeks, right? This volume, right? If you were to see a bounce, a dead cat bounce, then we will be seeing low volume, and that's exactly what we saw compared to what we saw here, the 6 consecutive sell-off days, where we saw the average volume being taken out every single trading day. But during this oversold bounce, we did not get that. Instead, we continued to stay under the average daily volume. And so today it was a clear sign that this was a dead cat bounce. And all we needed to see was that retest of 510 or 509.80, and then retesting that daily 21 SMA that continued to decline. They're still descending to the downside. And so for the fact that we've rejected it, and today we've closed under the daily 10 SMA, confirms that Q2 is not going to be easy. We're not going to be seeing some easy dip buys, and instead we're going to be seeing some rather volatile moves to the downside as we continue to basically consolidate the entire 5 to 6 month rally in the markets into new all-time highs since October, or October to November, whichever month you guys want to choose. So, well, of last year, of course. So, based on this daily time frame, I mean, at the very least, I would expect to see tomorrow a small bounce heading into FOMC, and what comes after that, I wouldn't know. And we'll need to play it by just by how much the price is actually moving during the reaction of the FOMC results and Jerome Powell. Okay, my apologies guys, I was trying to figure out what's going on with my line there. So we do have this bear flag, right? This is a typical textbook bear flag, and we can break it to the downside if we're able to break below 500 and eventually break below 498.50. And once we're able to do that, then we can retake and take out the dead cat bounces low at 493.86. So if we're able to take this out, we should be seeing a retest of 490.50, and that whole number is critical. Why? Because it's 490.50 is the last line of defense before we're able to see the official pullback floor that I've had since February of this year, and that is at 477.50. Now I know you guys should remember that, and I believe on SPX that's 4800. So whatever ticker you guys use, these are the floors for SPY and SPX, and I've been talking about it since February. So make sure you guys have this on your chart. And from the all-time highs area, if I just drag the percentage here, the downside, we have nearly a textbook pullback from all-time highs to my 477.50 floor to about 9%, negative 9%. That's a textbook pullback. And again, this 490.50 is a line in the sand level that bulls will have to keep. But if they don't, then we're for sure going back down to 477.50. And mind you, 477.50 is not just a random level that I've chosen as the floor for a textbook pullback. Yes, it meets the criteria for a textbook 5 to 10% percentage range for textbook pullback, but Not only that, 477.50 was the previous all-time high level back in 2022. Okay, so late 2021 to early 2022. And so the fact that we've broken above it and the fact that we can come back down to retest it to consolidate this entire 5 to 6 month run, it just makes sense to me. It's a typical pullback, right? It's not a market ending, world ending, economy ending move. It's just a simple 9%, negative 9% pullback. So with this bear flag on the S&P 500, I would love to see a small green bounce tomorrow, and potentially I can reload or add a new layer of the S&P 500 short, since I only have one contract left. Overall, if we do get this nice retest of at least 503 or even 505 tomorrow, I will want to get some shorts on the S&P 500. All right, so we have a huge area of supply now. Since let me actually change this to red. Okay, so this is our new area of supply that we need to worry about in the next few days and even into the end of the week. Now, typically in the first day of a new month, we tend to see a little bit more of a bullish fervor, a little bit more of a bullish sentiment, but that can be completely negated for the fact that we are in a risk-off environment as big money and smart money continue to unload their positions. And especially, they've probably sucked in a lot of late bulls and even just FOMO buyers or even dip buyers. I would assume dip buyers during this recent dead cat bounce. All right, so they're just using them as exit liquidity, just more liquidity to continue to exit out of their long positions that they've profited off of really well for the past 5 to 6 months. So, you guys have to be precarious here, precarious about any future balances in the near-term future, actually, because that can just be a simple, I guess, quote-unquote, move by the big money or smart money people looking to use us, right, retail, as liquidity. So, or specifically exit liquidity. So that's it for SPY. Let's take a look at QQQ. So QQQ as well just beat every single one of my targets today, as if it was nothing. It just completely just washed down all my targets here to the downside, and I'm still holding a full position on QQQ short. I took complete profits on IWM in the morning, and then I took off half on SPY, and I only have one contract or one runner left. But QQQ, on the other hand, I am still holding. Why? Because I still think that leading groups like tech stocks, specifically, cybersecurity and semiconductor stocks, which are leading groups in the tech sector, will continue to see a decline, whether or not we see a big earnings move or just a great earnings report. Because again, all these names that have had a big gap up have eventually filled their gaps and have not been able to hold or uphold their gap up lows. For example, Microsoft. Right? Microsoft was one of those names, and Microsoft today has completely obliterated its gap up. And also Google has been making lower lows and lower highs as it blew past below its gap up lows as well. So, with big tech stocks not being able to hold their earnings gap up, it's telling you something, right? And even today, after hours, Amazon had a very, very muted reaction to such a great quarterly earnings report, right? So all these quarterly earnings reports seeing massive gap ups and immediately being followed by a lot of selling coming in, it's telling you that the market is not ready to have these individual mega cap stocks to move up higher, right? It's not ready yet. So QQQ, I expect to see a much more relative weakness in the near-term future, at the very least into the end of May. And then we can start talking about, depending on where the prices are at in the markets, for example, QQQ or NASDAQ or the S&P 500 or SPY, we can then start to begin looking for a potential pivot, an official market pivot. right? So QQQ, I'm expecting to see another retest of 417.30, or at the very least, or I would say max, and ideally, a retest of 413.07, or at the very minimum, if you guys just want to round down, 413 to the whole number. And so, if we're able to come back into this gap up area and then continue to move down, because again, we do have another gap up area that we have not filled in. We can't see another move down to around 47.50. And so that is going to be something to look out for. But again, QQQ, I've given you guys this target a long time ago. Okay, so this is the 402.35 target that I have for NASDAQ. And why 402.35? Well, first of all, this daily 200 SMA is starting to curl off now. It's about to curl and flatline. And at whatever point in time that we do decide to retest the daily 200 SMA, and I can guarantee you guys that we will retest it, we can't see a coinciding retest of 402.35 and the daily 200 SMA as well. So that's something that you guys should remember too. Okay, hey, thank you guys for 4 likes. Awesome. Okay. So again, for all the markets tomorrow, we have a bunch of economic data coming out before FOMC, the rate decision and the news conference. So if you guys are staying cash, stay cash. If you guys are short, stay short. It's still pretty simple. It's as simple as that. I would say, trying to long even commodities at this point is a bit high risk, which is the reason why I took out my position on EOG and then oil refineries. Hey, Sparky, what's up? Thank you for the hearts. Yeah, you did make it. So you do have to go back to the recording for at least, well, from the beginning to around 15 minutes, but hey, you made it. That's all that matters, right? So just as a quick summary, guys, okay? We need to remember that today we actually saw market breadth seeing some overall weakness, right? We saw just complete broad selling and weakness. It wasn't just one single sector. We saw every single sector seeing some sort of a sell-off, and we saw especially the leading they were laggards, but they were now leading into this market quarter 2 sell-off or pullback. We saw these lagging but now leading sectors like commodities, like miners, gold, silver, copper, all these different metals and precious metals. They started to move up higher, and they're raging, right? They were raging and surging in prices. And so today we saw the first sign of huge relative weakness. So when we have commodities and equities starting to act weak on the backdrop of bonds, right? Bonds have been weak for weeks. Bonds have been weak for weeks because bond yields have been raging to the upside. And like I've explained last week, the 10-year yield is now back to the previous high points that we saw in 2022. So mortgage rates are also starting to go up again, and mortgage demand is starting to tick down once more. And so, I've had some realtor friends as well who tell me that they're not seeing much of anything in the housing market. They're not able to close deals. So, people don't want these mortgage rates as it's creeping higher, back into that 2022 high interest rate territory. So the market is feeling the crunch here, guys. I mean, overall, just today was a huge signal to me that we are indeed in a risk-off environment. We need to be reminded of that after last week's oversold but very, very low volume bounce. Right? Okay, so make sure you guys remember that for SPY and QQQ. I give you guys these targets, right? So again, SPY, make sure you guys remember that tomorrow is going to be a very day trading friendly environment. We need to see, well, for me personally, I would want to see a nice little bounce before FOMC, or maybe the reaction is to the upside initially for FOMC. rate decision, and then during Jerome Powell's opening statement, we can have a nice move back to the downside. But again, I would want to get short again on the S&P 500 at 505 or even 503 on any retest. But overall, I am still very bearish. We have this nice daily bear flag on the S&P, but overall, stay bearish, right? Stay bearish. We have not seen any an economic data indication or just overall any of the macro risks that we've been talking about. They haven't changed. They are still pointing towards a pretty bad market crunch to the downside, not to the upside, to the downside, right? And again, tomorrow the Federal Reserve and Jerome Powell will be honing in on the PCE, the core PCE data, and just overall the inflation data that we've been seeing for the past 3 months. And again, they're getting very worried, and the market has been feeling their worries. The market will always react off of the Federal Reserve's reactions and their own personal worries, like Jerome Powell's very hawkish words if he does say any type of hawkish things tomorrow. All right. So the least that we can hope to see from Jerome Powell, if you guys are bullish, is a little bit of a dovish stance on the interest rates and including inflation, even though inflation has been upticking back up higher due to very volatile food and energy prices, right? I mean, you guys should see it now in your own daily lives, right? The gas prices have been ticking up higher and higher and higher as crude oil continues to move up higher. But again, today we saw the first sign of weakness across every strong commodity. All right, we saw that through every single commodity, and crude oil continues to make that lower high, lower low trend. Okay. All right. Well, I am going to end it here tonight. I do have, again, a really bad case of a headache, so I really need to take some Tylenol and get some rest. But yeah, that is it for tonight, guys. Thank you guys so much for clicking the like button down below. Thank you guys so much for even joining in and listening to me. My avocado toast is getting to be very expensive. Yes, that is very true. All right, our food prices are going back up and just staying at highs, and gas prices just continue to trudge up higher. So, you know, this economy, right? But yeah, I will see you guys. Hey, thank you guys for the 5 likes. But I'll see you guys on Thursday at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. And for all the people who are just joining in now, make sure you guys watch the recording of this live. It's only 25 minutes long. So just from the beginning to the end, watch it. Watch it before the markets tomorrow. I'll give you guys really simple but very crucial levels to be watching out for, especially for the S&P 500. Because again, we might see an expansion of volatility like we saw today, where the VIX actually stayed over that 15 value. And I mentioned that to my private members in the CFO Discord. And it became a very significant value today as we saw that nice sell-off into the end of this month. All right? Okay, so good luck tomorrow, guys. Message me if you guys have any questions or if you guys need any help on anything on Instagram at ChartsFocus1. But that is it for tonight. Have a great rest of your night. I'm gonna get some Tylenol. Have a great sleep. And I'll see you guys on Thursday. Thank you so much for watching.